Hello YouTube, welcome back to the family. Today I wanted to talk a little bit about Nike, talk about their earnings and why it's affecting the stock market, and should we be worried about the future of the stock market. So we can see here Nike today is down 3.41, down to $95.33. In comparison, the S&P is down 2.11 today and the NASDAQ 2.84, so not too far off those. You see over here the year range, the high, the 52-week high was 179.10. And the low is at 94.48, so basically right, pretty much now. And the other thing to look at here, the PE ratio is 25.4, which is potentially trading a little more expensive than other stocks. Like I said, normally that's about 15, so that's potentially a little high, but that's not what we're getting into today. Let's see what Nike said with their earnings. So it says here, shares of Nike plunged as much as 10% after hours Thursday after the athletic gear giants executive said price-cutting efforts to flush off-season clothing from warehouse in North America would dent gross margins for the rest of the fiscal year and warned of big potential hit from the stronger dollar. So the reason that it's important that when they're talking about the stronger dollar, if companies are selling to other countries, like let's say China's buying Nike shirts or England's buying Nike shirts or whatever, the euro that they have to pay for is not as strong as the dollar, therefore Nike isn't getting as much money after they convert it back to dollars. So just something to think about for that as well. The entire world economy is all kind of connected and not just the US like a lot of us think about. So from what I'm reading here is Nike has a bunch of inventory and they're having to put a lot of sales out to try to get rid of some of the inventory. So they're gonna be like low cost stuff, so they're not gonna make as much money on a lot of it. So of course you guys know that I am now on the investor relations page for Nike, and let's see what happened here. I have a couple things highlighted here I want to go over. So first quarter reported revenues were $12.7 billion, so that's up 4% compared to prior year. Nike direct sales, meaning not going through any like retail stores. They put a like Foot Locker or any other stores like that. They're just selling it themselves. Direct sales were up 5.1 billion. That's up 14% on a currency neutral basis. And diluted earnings per share for the quarter was 0.93 or 93 cents, which is down 20%. My favorite metrics to look at is just net income. That's just bottom line. How did the income go? Net income was 1.5 billion, which is down 22%. Diluted earnings per share was $0.93 with 93 cents, which was decreased 20%. The balance sheet review says inventory for Nike were 9.7 billion, up 44% compared to the prior year. Driven by elevated in-transit inventories from ongoing supply chain volatility, partially offset by strong consumer demand during the quarter. Cash equivalents and short-term investments were 11.9 billion. It's down approximately 1.8 billion from last year. This does say it was offset by share repurchases and cash dividends. So dividends, Nike did pay 480 million, and share repurchases, it looks like under the $15 billion program, which was done in August of 22, a total of 83.8 million shares for 9.4 billion was repurchased. So you can see I have the net income pulled up here on the income statement, and you can see the 3 months trailing last year to the same time 3 months trailing this quarter. It is down 22%. So this year is $1.468 billion, and last year at the same time was $1.874 billion. So it's a 22% less net income this year. So why is this important, and why is it affecting the stock market so much? You might think Nike is just a clothing company. However, Nike is a huge company and that sells a lot of stuff, and they have a lot of market, and they are just showing just a weakness in the consumer, a weakness in the economy. Therefore, companies that are anywhere near retail like they are will most likely, what Wall Street's thinking, most likely have very similar results. So you could even think like Target, Walmart, other clothing brands might have the same problems, Adidas, Under Armour, all those types of companies. Therefore, people are a little more bearish on the economy. So hopefully, we're hoping this isn't all earnings season isn't going to be like this. However, if it is, the only pro I can think of is next year's year-over-year comparison will be much easier to compare against. So instead of them being down 22%, if the next year they can even get back to what they were last year, they'll be up 22%. So that'll be a really bullish thing. So hopefully it just makes next year's comps much easier. So Anyway, that's kind of why the market is not doing well with seeing some of these earnings statements. So we'll probably see a little bit more pain, in my opinion, for a little while. October 13th as CPI comes out. I personally think that's the most important thing that's going to hit the market here in the next couple weeks. So hang in there, guys. I continue to dollar cost average into index funds and stocks I love. I'm not telling you guys to do that, but this is the time to do it in my personal opinion. I'm not a financial advisor. But if you guys like this content, please consider subscribing to the channel. Smash the like button. Leave a comment down below if you think the economy is going bad or what you think about Nike in general, especially their stock price. Either way, hope you guys are having a great night. I'll talk to you later.